What is up YouTube, welcome back to the AlphaFX Academy. It was one of the worst weeks for the US stock markets in over 3 months, and gold wasn't an exception. And this is because of the renewed concerns about the inflation-dented optimism over the continued financial supports by the central banks for the financial markets. So what does it mean for the gold USD spot market? If you want to find out, stay tuned, it's coming. Let's kick it off with the analysis and forecast, guys. Now, usually at the beginning of the videos, I talk about some economics and fundamentals and how are these things affecting the gold USD spot market. But today, I want to talk straight technicals. If you want me to focus more on the economic and fundamental side in the next video, leave a comment in the video below. So, starting with the analysis, looking back what happened in the past couple of weeks. Looking at the chart on the 4-hour time frame on the gold USD spot market, you can see that in the past few weeks or the past month, we had a really nice bullish market direction, which the price was going up. And you can tell because the price was going up after the flash crash, creating high highs and high lows. And also we have a really nice bullish trend line. And then we also had two bullish flag patterns. Now, the bullish flag chart pattern is an extension of the general market direction, and it's it's really good risk-reward ratio. The only problem with the bullish or bearish flag, it's difficult to spot where is the bottom, because Fibonacci usually doesn't always work on the bullish or bearish flag patterns. But what really works, and I'm going to tell you how to trade the bullish or bearish flag patterns, is you have to use support and resistance. Yes, it's really simple but very effective. If you look left on the chart, price broke to the upside, and then as soon as it started to retrace, you can see that on the left hand side we have a tiny little retracement, so the price already gave us the floor for the bullish flag pattern, and you can see that price so far respected really well the previous support level. And then what happened is the price again broke to the upside, breaking the descending bullish flag pattern, and then immediately retraced back. If you look left on the chart, within the bullish flag chart, within the bullish flag pattern, you have a resistance level, which then became a support. And then what happened after is the price again broke above the previous flash crash level. So the red line you can see on the chart, that was the flash crash level. The price broke above and then retested again, finding support on the flash crash price level when price hit 1680, so it completely melted in one day. So what happened is price found support on that level, and then it bounced again and creating another bullish flag pattern. And you can see that previous support became a resistance, and we have these two biggest wicks, which you cannot really protect yourself because sometimes the price does wick down or up. The only way to protect yourself is using a stop loss. And even if your stop loss get hit, if you see a massive rejection, so the price pulls back immediately above the support level, you can see that, or you can be confident that support level is going to hold. For how long? Well, that's something to tell by the market. And then immediately you can see that the bullish flag pattern always ends with a massive impulse move to the upside. So as soon as you identify the support within the bullish or bearish flag pattern, it is followed by a really bullish impulse move or bearish impulse move to the upside or downside, depending on what you trade. In this example, we have a massive wick to the upside. But then price failed to break the 1830 level, which is, if you look left on the chart, obvious support and resistance level. The price failed to break above, creating a lower high. And then what happened after is price broke the bullish trend line. Is it a problem? No, because I usually say that trend lines are there to be broken, but what you have to focus on is whether the price broke the market structure, the previous high low. The price in this example broke the previous high low, breaking the market structure, breaking the trend line. So we have two confirmation that the price or the market direction is going to change. And then what happened is I sent out an analysis to my team that there is a good buying opportunity at the 1794 level. So I placed buy limits at 1794, which price did respect, did come up a little bit, but then immediately wiped out all of my stop losses, losing about 4% of my whole trading account.
Surprise, motherfucker.
Does it hurt me? Absolutely not, because I only lost 4 to 5% of my account, and I know some people blown their whole trading account. And this is something you have to accept, that sometimes the analysis doesn't go into your direction, because the market doesn't care where your stop loss is, where is the trend line, or what is the market structure. We had so many fundamental and important economic news in the past couple of weeks, and also we have increased uncertainty in the markets, which you cannot protect yourself. I mean, we're not trading in normal market conditions, because uncertainty is at all-time high. So of course price is going to whiplash, of course price is going to melt, price is going to do so many uncertain things, because uncertainty in the financial markets is at all-time high. So leaving the past behind and focusing on the forecast, what do we see on the chart? You can see that there is another support level which so far respected. And if you go down to a smaller time frame, for example the H1, so what we can see on the chart is we have a bearish flag pattern. Now let me get my channel tool. So the bearish flag pattern looks something like this. And if I just zoom out, we talked about the bullish flag pattern, and let me just zoom out so you can see. So if you look left on the chart, what do you see? We can see that we have the bullish flag pattern, so the price or the channel is going against the general market direction. Now because we had a trend reversal or a market direction reversal, because price broke not just the trend line but the market structure, so we have two confirmation that the trend is going to change. And you can see that the price broke the previous market structure and trend line, and now price is giving us a bearish flag pattern. And what do we know about the bullish flag? It's going against the general market direction, so if the market direction is bullish, the bearish flag is bearish because it's going against the main trend. If the market direction is bearish, of course the bullish flag pattern is going to go against the general market direction, so it's going to go up. So what you can see on the chart is that we had a trend reversal, and then we had the bullish flag pattern because the bearish flag pattern because it's going against the general market direction. But what happened last week is I posted another analysis incorporating one of my colleagues, Michael from Riding the Waves. If you don't know Michael, check his link in the video description below. So he posted and he spotted the bearish, the bullish or bearish flag, it doesn't matter. So you have this ascending channel with the ceiling and the top. So Michael actually spotted the pattern, and he posted to his VIP group about a potential pullback. So as soon as the price came down from the top of this channel, it was rejected at 1800, 1803, then retraced all the way back to this support level. And what price did, I hope you can see it. So what price did, if I use the Fibonacci from swing high to swing low, you can see that price touched the top, came down to the bottom, this support and resistance level, and then bounced back immediately to the 7860. Now before this bounce happened, I had a look at Michael's analysis, and I quickly realized that shit, there's something going to happen, there's going to be a retracement, a pullback. So I sent out an analysis, I tried to show it in the chart, I sent out an analysis to my team that there's going to be another potential pullback. I'm not going to trade until price reaches the 1800 level, and I set a sell limit straight to 1800. So what price did is, you can see that it wicked up to 1800, and you can see that it is the Fibonacci 78.6 level. It wicked up, hit my sell limit, and then immediately pulled back to the downside, melting all the way to 1790. And then of course it bounced back again to the 50% level, but then price broke out from this bullish flag pattern. So again, there's another confirmation that the price is gonna go much lower than the current price level. How you should trade next week? You should be focusing on whether the price is going to come back to retrace to this level, because right now, if you look left on the chart, we have another support level to break, and price is currently hovering around the 1787 level, and we have these big ass wicks, so 1782 and 1785 where price is currently at now. So there is a possibility that the price is just gonna come down to retest this support level, and then maybe pull back to retest this ascending trend line. Which is going to happen, I have no idea. But what can you do is look for these obvious retests. If price respects the 18 1787 level, and if price pulls back to this bottom trend line, then you can enter into sell position. So if price comes back to this ascending trend line, retesting the bullish flag pattern, bearish flag pattern, so this ascending trend line or descending, whatever, the bottom trend line, guys, if price comes back to retest this level, then there's your sell opportunity at 1792. If, for example, for any reason, price is going to break below the 1784 level and you have another support level which becomes a resistance after, if price comes back to this level, then you can be confident to sell because price is going to continue to the downside. If I go back to the H4 chart, you can see that it is a clear reversal of the trend, reversal of the market structure. So from bullish next week or last week, the market went straight bearish, and you just have to look for sell opportunities. That's the easiest way to trade this market. And because the price is currently sitting at a support and resistance level, it is not exactly clear, or I cannot give you a signal or an exact price level of which the price is going to bounce back, because as I said, let me just recap. So here's going to be the playbook for next week. If price is respecting the 1787 level, and if it pulls back to the bottom of this trend line, retesting the support level, retesting the trend line, there is a sell opportunity. So let me just put a sell thingy here. So if price pulls back to 1792, where should you place the stop loss? Well, is there a chance that the price is going to pull back and bounce back into this bullish flag pattern? Of course, there's an opportunity. Of course, price could retest, could go back into this channel and bounce up and down, up and down. But in my opinion, the best place where you should place the stop loss is 1798 or 1800. Now, I know it's a bit big, but if you look at the bigger picture, you can see that there is a massive opportunity to sell all the way to, even 1700, because if you look on the chart, we have many support levels. We have another support level at 1778, and then also because we had the flash crash, we have multiple take profit levels, we have multiple support levels, we have multiple resistance levels. So if you're looking at just this tiny bullish flag pattern or bearish flag pattern, guys, this is a bearish flag pattern because the price broke out from this bearish flag pattern. Where is the bottom? How far the price can drop? Well, it can drop all the way to 1700 or 1680 even. So my best advice is look for sell opportunities. Don't be afraid to use a bigger stop loss, because if you look at the risk reward ratio, it's huge. So even if you lose, or even if you use $5, $6 or $8 stop loss, you can see that there is a massive opportunity to sell to the downside. So the risk reward, even with the bigger stop loss, is huge. So if you guys get any value out of the weekly videos, please subscribe to the channel, hit the like button and leave a comment in the video. This is the Alpha Facts.